Give us your
Thank
thoughts
you,
on
Wole.
what we've seen in the market today. A fantastic and phenomenal, in my view, start to the fourth quarter. We saw the market up 3%. What are your thoughts?
That's exactly it. The Nigerian market is actually a strange one at the moment because last week we saw the market turn around from Wednesday last week and traded up Wednesday and Thursday. And today that momentum has continued and the market was up 3%, driven mostly by the banking sector. We've seen quite a lot of interest from international investors in the market, not so much from the domestic PFAs, but it's mostly driven by internationals, basically looking at current valuations and comparing it to other emerging markets and seeing the value in this market at the moment.
But what would you say? Would you say we've turned the corner right now? Because we did see the market trend lower in the third quarter, and going into the fourth quarter now, everyone has talked about the market being cheap. Do you think we've turned the corner?
I won't be that emphatic to say that we've turned a corner. What I would say is that there's positive sentiment and positive momentum at the moment. Unfortunately, what we can't get away from is the fact that the banking sector is still holding quite a lot of NPLs that have equities as collateral. And what we're seeing is whenever the market sort of starts to rally, we're seeing an increased supply from banks trying to basically trade their way out of some of the NPLs that they have. And therefore, we see the market trend down. And I think that's been the general trend throughout the year. We're now about 10% up year to date. At the peak, we were up about 35% sometime in May. And whilst I don't think we're going to do a lot worse than that, I'm not sure if the market is going to recover that much more either from here until the end of the year.
Okay, but let's look at political risk because that's on the front burner. We saw the bombings in Abuja, I think a big surprise to many, but it really does highlight the issues going into the elections next year. To what extent would you say political risk is the factor at play in the market right now?
I think today's performance is evidence that clearly political risk is not a factor. I mean, I was speaking to a couple of our international investors in the market, and to be honest with you, they don't see the correlation between what's happening on the political front and what's happening in our markets today. And today, I think, is evidence of that fact, that despite what happened on Friday, and you would have expected the market to react in some way or the other, if anything, we see even more buoyancy in the markets today.
Indeed, a very strange reaction there. Now let's be more specific and look at some company news that came out over the weekend. And of course today, UBA did announce that 20 billion capital raising. What are your thoughts on how much they were able to raise, one, and then of course, what does it tell you about the corporate bond market right now?
What we found, I think UBA is possibly the second or third corporate bond issue this year after UACN. Essentially, UBA set off to raise about 35 billion. They raised 20 billion at a coupon of 13%. Now, if you look at it on the face of it, it seems quite expensive. But when you consider that UBA issued essentially a subordinated unsecured security, and if you also consider that the outlook for short-term, medium-term interest rates is on the rise, especially after the rise in the MPR rate that was announced about 2-3 weeks ago, I think it's fairly priced at 13%. Now, the fact that they weren't able to raise the 35 billion is perhaps sentiment indicative of what investors feel should be a premium right now. I think some investors came out to say that they thought the premium at 13% wasn't enough for the corporate issue.
Okay, and what does this tell you about UBA? I mean, does it change your rating of the stock in any way?
I mean, if you look at UBA, I wasn't surprised when they came out to actually raise capital, because if you look at their balance sheet at the moment, I think based on their half-year results, we estimated that they were at a capital adequacy ratio of about 11.8%, 11.9%. And when you compare that to the statutory threshold of 10%, they're operating a pretty thin margin. And also when you consider their loan to deposit ratio of about less than 50%, it's probably the lowest amongst tier 1 banks. Tier 1 banks being First Bank, UBA, Zenith, as well as GT Bank. So for them to really be operating at the same level, or to be working their balance sheet at the same pace as their contemporaries, I would have expected them to have raised some sort of capital to be able to grow their balance sheets a lot more aggressively.
And then finally, let's look at the banking sector in the fourth quarter. We do know that it's down year to date. If you look at the sector as a whole, what are your expectations for the fourth quarter, especially with earnings season coming in another few weeks?
To be honest with you, the banking sector, my sentiment on the banking sector is probably the same as I have for the rest of the market, in that not a lot is going to happen. But what I am looking forward to is, I think we heard that the Senate is meeting on the AMCON board to approve the proposed names, and we should get confirmation of those names towards the end of this week. And I believe AMCON should come into operation possibly within another couple of weeks or within a month. Now, once we see AMCON start buying some of those MPLs, I think what we're likely to see on the equities market front is we're likely to see the supply that we're seeing by banks reduce. And also for the banking sector, what we're likely to see is those banks that were perhaps constrained by their balance sheets when it came to extending loans, we'd probably see them return to the credit markets, and we're likely to see that reflected in results, not in this quarter, i.e. quarter 4, but we're likely to see that come through perhaps in quarter 1, 2011.